Good morning and welcome back to Market Day Report. I'm Chris Swift. We're looking forward to the WISER report, and we've seen the grain markets firm a little bit in the bean market and soften a little bit in the corn. So anxious to see now what we're going to come up with. And looks like on our corn board, we're still going to be a little bit softer going into the report. December down 3 1/4 at 4.84 3/4. March down 3 1/4 at $5.50. July corn 5.13 even, down 3 3/4. Our beans have been the shining light this morning, trading a little bit higher, and we're kind of mixed now. I've got Novi's up 2 at 12.54 1/2. Jan beans up 1 1/4 at 12.73 1/2. March down 1/4, 12.84 3/4. Chicago wheat had been softer, and Chicago wheat is still softer, down 4. December 5.52 even. March down 4 3/4, 5.82 1/2. New crop July down 6 3/4 at 6.18 1/2. KC hard red winter wheat is down 7 1/2 on the December at 6.59 3/4. March down 7 1/4, 6.69 even, and the July contract down 8 at 6.78. We're going to look at the spring wheat market here, and spring wheat down 5 1/2 in Minneapolis. December 7.12 3/4. March down 4 3/4, and July down 5 1/2. I got Ted Seifried on the phone here with me this morning. Ted is with Zaner Ag Hedge, and I know you're busy this morning taking calls and telling everybody exactly what they need to do just before this WISER report comes out.
Boy, howdy. I'm trying, Chris. I'm trying. Hey, listen, we are looking for slight declines in yields for both corn and beans, but you're looking for a little bit of an uptick in soybean carryover that's based on the quarterly grain stocks that we saw at the end of September. The trade's not looking for much changes on this report from a production perspective, and I think that might be a little bit dangerous. Now, the question, Chris, is which way does it go? You've got some analysts and traders out there that really want you to believe, or that do really believe, that yields need to come down a lot more than what they have so far. If that's the case, this will be the silver bullet that saves the soybean chart and saves the corn chart, because otherwise, you've got some really not good technical developments that are occurring at the moment. You've got corn kind of disproving that breakout that we had last Thursday. If we do close below Thursday's low, that looks like immediately we're going to test the low that we had from mid last month and most likely get through it. So you need a bullish report to save us from doing that. And for soybeans, we've broken that double bottom. We are staring off into the abyss. There's a lot of thin trade down to about 11.80. We need that silver bullet of a report to fix this, to bring us back up over that double bottom. What was support is now resistance. And again, if we don't have the report to do that, this could end up getting a little ugly. A lot of people just really want to see this seasonal low, this harvest low, and the seasonal bounce higher. The thing about seasonals, Chris, is that they work most of the time. They don't work all the time. And there are years where it doesn't work out. And you got to say, look around, look at the economy, look at macroeconomic things, look at global unrest. You can say maybe this is the year that seasonals don't really work very well. We are trading higher prices than our historical average. We have a dollar that's been rallying very, very sharply since the middle of July. So this is a very important report, Chris, as you know. How we end the day, I think it's going to set the tone between now and the end of the calendar year, bud.
Sure. So we know that this report is also going to have some kind of issue or revision of the number of acres. And we know that we had seen a real heavy move towards 4 million acres in the corn, 2 million acres short of beans. Do you see any changes in that, or do you think USDA will stick pretty close to what their previous numbers were?
Well, Chris, historically, this would be the report where they change acreage because they've got enough FSA data to do so. But in the last few years, they've been getting data faster. Age of technology, I suppose. And so that was all done last report. I can't imagine they're going to change those numbers again on this report. We had some pretty big changes, almost 1 million acres of corn last report. This report, I don't believe they can actually change planted acres. They can tweak harvested acreage a little bit. They might do so. They might take some harvested acreage away from Nebraska in the double drought areas, the 2 years of drought areas. But no, I am not seeing any major changes on acreage on this particular report. The highlight on this report is going to be yield because it's the last yield number that we're really going to see until the January final production number.
Fantastic. Ted, stay with us. We're going to take a real quick commercial break, and we'll be right back. We're talking Ted Seifried. Stay with us. And welcome back to Market Day Report. Let's take a look at our live stocks and see how they're trading now. And looks like they're a little bit firmer this morning. So I've got the October contract up 85 now, 185.35, sitting on the high of the day. December up 95 at 187.92, and Feb Fats up 87 at 192.12. Feeder market, it held its gains for most of the morning and still is putting on a little bit more premium. October at 251.70, up 152. November up 157, 253.57, and out to the March contract up $1.85 at 257.72. In our hog market this morning, we've been a little bit softer and still are. D's down 55 at 69.42. Feb down 47 at 74.20, and the April contract down 30 at 80.70. I'd like to invite my guest back in, Ted Seifried. Ted is with Zaner Ag Hedge, and we've seen a little bit of price fluctuation in the cattle market. We know that Packers paid about $1 more yesterday. Is there anything else we see kind of wrapping up the week in the livestock market?
Yeah, first of all, Chris, the higher cash trade was a welcome, change. So that's helping. I'm also going to say, we had CPI numbers come in hot today, hotter than expected, and yet the stock market did not sell off on that. So the combination of higher than expected inflation and kind of renewed optimism in the stock market, i.e. renewed optimism in beef demand, consumers willing to absorb the higher priced beef that they're paying at the grocer's counter or butcher's counter. Those two things, along with that cash trading higher, should be really good. We should be higher, right? So, and we're bouncing off some very key support. There's some people that are going to argue that, hey, that was the correction. It is over now and we've got to go higher. I think a lot of that's going to really depend, Chris, on how our economy looks going into the fall and winter months. I've got a lot of concerns, based on geopolitical issues and that inflation number and energies. But at least for the moment, the last 4 or 5 days, it's been better in the stock market. We're on pace to actually have a positive week in the stock market and indices for the first time in 4 weeks. So, hey, I want to embrace the optimism, but I'm doing it cautiously.
Absolutely. And I tell you, we've heard the word resilience more than once, and that is a real good, true word for the consumer right now, that they have been very resilient to all these really higher prices. Ted, certainly do appreciate you taking the time to be on with us this morning. It's Ted Seifried. He is with Zaner Ag Hedge. And Christina, we're up and rolling in a few more minutes, and we'll see what Wazzy's going to show to us.
They may be resilient, our consumers, because they're going into debt right now.
Well, that's true. It shows how much money is really floating around out there.
That's right.
It's the trillions of dollars are still out there.
And how much faith is still in the American economy?
Oh, absolutely.
Well.
And it's hard to buck against the American economy. Really and truly, I've been doing this for 34 years, and it has yet to fail. It might have been knocked a couple of times, but it's never failed.
Well, I'm sure proud to share a country with you and that type of thinking.
Absolutely.
Thank you, Chris.
Sure.